The Senate is focusing on the collapse of Silicon Valley Bank and Signature Bank today. The Banking Committee laser focused on the regulatory response to those collapses as lawmakers look to prevent similar meltdowns. Joining us to weigh in on the outlook for bank policy is Senator Tina Smith, Democrat of Minnesota and member of the Senate Banking Committee. Senator, thanks so much for taking some time here with us today, even as the hearing going on right now. First and foremost, of the actions that were taken in response to the collapse of Silicon Valley Bank and Signature Bank, what was your immediate reaction in that moment and your grade that even you would assess to the situation as it unfolded?
Well, I was very glad that the regulators in the Biden administration took decisive action early to contain the panic that I think had the potential to spread throughout the system, particularly to smaller banks that have a completely different and much more responsible business model than Silicon Valley Bank, for example. I think that did what it needed to do. It stabilized the system. And now what we need to do is get to the bottom of what happened. I mean, clearly there was some significant mismanagement at these banks. I think about Silicon Valley Bank that had obvious interest rate risk. That's kind of, banking 101 to manage your interest rate risk, and also operating in a very concentrated industry, very volatile industry in tech and venture capital. But we also need to understand what was happening from the supervisors. The Fed that was supervising this bank clearly had identified problems, and I am wanting to know more about what actions they took and how the bank responded and whether they used all the powers that they had to prevent this. And then, of course, longer term, we need to take a look at whether the regulations that we have in place for banks of this size that clearly have significant systemic risk, whether those regulations are tough enough, particularly when it comes to things like stress testing and capital requirements and so forth.
Well, and Senator, thank you so much for being here. As we have heard, in the wake of this, Silicon Valley Bank was among the banks that was heavily lobbying to not be subject to the same level of scrutiny because of its size as the 10 or 12 most systemically important banks. So was that a mistake to roll back some of those protections and some of those regulations as Congress did several years ago?
Well, look, I think that one of the things we're going to learn from this internal review of the Fed and that we have to grapple with is whether that law went too far. I offered amendments when we were passing that law back in 2018 to make sure that banks the size of Silicon Valley Bank were not exempted from those more stringent capital requirements and stress testing and the requirement to have a resolution plan, kind of a living will for banks when they fail. So clearly back in 2018, I thought it was going too far. And now that we've seen what's happened with this bank, I think it's important to figure out whether we did, in fact, go too far. It kind of looks that way right now.
And so as it pertains to figuring out what happened, how was the committee also trying to understand where some of the bank failures could be, even as some have called a catalyst for an economic recession?
Right. Well, I think that's a very important question that I'm hoping to get to today. I'm going to be asking questions about how pervasive the Fed thinks and other regulators think this interest rate risk is. If you have business models and banks and other institutions that are predicated on basically free money, very, very low interest rates, what risk are those organizations at now that interest rates are higher? For example, other mortgage companies, and what risk are they exposed to? I think it's very important that we understand that, and that's the role of the committee to dive into that and figure out, even for institutions that aren't explicitly regulated by these by the Fed or by the FDIC, but are responsible overall for the financial health and stability of our economy.
Senator, I'm curious what you're hearing from your constituents, and in particular, if there are small and medium-sized banks in Minnesota that have gotten a hit because of this, right? That have seen some deposit outflows, even though we know overall the numbers are stabilizing. But what are you hearing from them?
Well, Minnesota has many, many community banks, small banks that are rooted in their communities and have a completely different business model from this highly risky and irresponsible way that Silicon Valley Bank was managed. I had a chance to meet with Minnesota bankers last week to kind of hear where they were, and I thought it was very apt that they said, Senator, if we were worried about our own banks, we wouldn't be here today. We'd be back home taking care of business. It's very important for depositors to realize that those banks that are not only smaller, but have a completely different and much less risky business model are are not exposed to the same kinds of risks and challenges. And I believe that those community banks are very important to the overall strength of our banking system, because that strength comes from our diversity.
And so even with that, there have been some questions out there about the connection of some banks who had exposure as well to crypto, and saying that this was an attack on some of those banks by regulators in order to shore up the traditional finance versus the decentralized finance. What would the response from the committee be like to that?
Well, I have expressed deep concern about whether these highly risky and volatile crypto assets being held in big banks would contribute to the instability and the risk profile of these big banks. And clearly what happened to Signature Bank is a demonstration of what it could look like when you have kind of a collapse of those assets, and then you have a run on the bank because people lose confidence in the bank. So I think it's very much an issue that we need to be thinking about on the committee as we are considering what kind of consumer protections we need for crypto assets more broadly.
Senator, two questions about potential changes here. One, do all deposits in the U.S. need to be insured by the FDIC? Two, do all banks, no matter their size, need some kind of stress test?
Well, I think that it is important to first of all, I think that it's very important that we don't apply the same regulatory standard for a massive, systemically significant bank that we apply to a small community bank in Owatonna, Minnesota, that has a completely different risk profile. Size does matter in terms of the risk that you might see, but it also the business model matters. So I am not one who believes that we should have a one-size-fits-all approach. However, when you look at these big regional, very, very large banks, clearly the collapse of Silicon Valley Bank shows us that even if you're not designated as systemically significant, you still can have a very powerful impact on the overall stability of the financial system. And that's why, back in 2018, I was opposed to rolling back some of those stress tests for those very large regional banks.
And Senator, finally, if I might pivot for our last question, I want to ask about the debt ceiling, because that's the other, certainly for market participants, the other big question right now. We had House Speaker Kevin McCarthy talking about this morning that there's not been any progress on debt ceiling talks. The American people, the markets, everybody wants to get this done. Members of Congress want to get it done too. Do you think we're going to get another 11th hour situation here as we have in the past?
Well, I hope not, because we have seen that when you wait until the last minute to do something as simple as the United States agreeing that we will continue to pay our bills, it has a very negative impact on the U.S. economy, the global economy, and the trust and the full faith and credit of this country. I would urge Speaker McCarthy to look in the mirror. What we need to do is to pass a clean debt ceiling extension right now. And the president and Senate Democrats have expressed an interest in then having a conversation about what the federal budget should look like. But the speaker has still not offered up any ideas of his own or for his caucus about what that should look like, what he proposes, what cuts he would propose. And you can't have a negotiation if you have one side refusing to bring any ideas to the table. So these two things, though, need to be completely separate. Let's pass a clean debt ceiling extension, and then let's have a discussion about what the federal budget should look like.
Well, we'll see what ends up happening. We'll be tracking it very closely. Thank you so much for your time this morning, Senator. Senator Tina Smith, Minnesota Democrat, thank you again.
Thank you.